with the exception of the tax accountant. Often small businesses out of the box may have to consider or enter into contracts with suppliers that you may want an initial review on. And once you hire employees, it becomes almost essential. It's my experience that corporate attorneys usually are affiliated or are well practiced in employment law. And once you add an employee, you have added legal issues to your business that you need to be consistently aware of. Many of you may opt for vendors or independent contractor relationships. And remember, as we talked about in the first 2 weeks, independent contractors and the use of them versus employees is allowable, but is a matter of law. It is not your choice. There's a test, actually, I think I've sent at the request of many of you, the 24-point test that the Internal Revenue Service uses to do that. So just remember, the difference between an employee and an independent contractor is something worth you knowing and understanding the test involved with that. And it's a matter of law as to whether or not someone is defined as an independent contractor or an employee. So make sure you check that out. I'm not against the internet option and the do-it-yourself approach. Frankly, the do-it-yourself approach and the internet options are starting to cost some money, although they certainly don't add up as quickly as the hourly fees with a corporate attorney. You see 3 options here that I'm regularly familiar with, and I have had my clients over the past few years tell me work with some degree of efficacy. So certainly you can consider those options, particularly for those of you with part-time enterprises. I know you want to avoid a significant upfront attorney cost, and these may be helpful, but just keep in mind, once you need formal contracts or should you hire an employee, then I think it's worth starting to develop the relationship with a corporate attorney. The second professional affiliation is accountant. I'd be interested if Jim agrees with this. I need an accountant for taxes. The best find in the world is an accountant that begins to understand your business model and how you make money. Not all accountants are built that way, but they can be very helpful to you with your financial progress if they come to that understanding. Jim, any thoughts around accountants when they're best and all of that sort of thing?
I'll tell you how important I think they are. I think I would have put them number one. The reason is a good CPA is also a consultant, and all of the things that go around business. If you have an accounting firm or an accountant that understands small business first and your business as well, they're going to give you some guidance that usually saves you money because they're money people. So yeah, I think it's absolutely essential, and that most people think taxes only, but the reality is a good CPA is your financial consultant before you're ready to invest money in that kind of thing. And I would also add one other thing. Accountants more and more, in addition to being CPAs, are quite often certified financial analysts as well.
So you see from Jim, given all his experience, the issue here, and I think Jim made a great case for the accountant that goes beyond tax knowledge and can actually provide assistance with the development and the consulting aspects of your business. And I wouldn't have any argument with making them first as well. The third professional association that is essential is a commercial insurance broker. This is simply because when you take on a business venture, you are entering a world just like we do personally, where there is potential liability. And insurance brokers are the folks who give you access to the development of all the variety of business insurances that may be applicable to you. And they develop that. They can also, they generally are folks that can give you referrals into employee networks and things along those lines. But I just think commercial insurance is something that you need a real personal broker on. and need to proceed from there. Keep in mind, these three individuals, the attorney, the accountant, and the commercial insurance broker, are relationships that you want to put in place. I think it's worth interviewing 2 or 3. You need competency first, but then very quickly you want people that you feel comfortable with, because these people are going to know significant things about you, sometimes intimate things about you, and you want to be able to have those kinds of confidential conversations with these types of folks. So competency first, but then relationships are important here. It's worth an interview process until you do that. Keep in mind with the attorney, you need a corporate attorney. I've seen too many small businesses starting up in my lifetime who take the first referral from the family member. Lots of attorneys are taught to help people set up with legal organization. I doubt that I've seen too many criminal and personal attorneys do that as a personal favor to a small business owner. But then the need for contracts and employees develops, and you will want to, then you don't have the expertise and you need to go out and find that. And then I really like what Jim said around the accountant. A CPA is just essential, and strive to interview to see if you can find someone who you think is going to become a first-rate financial consultant, as well as bringing the knowledge with regard to taxes. And then the fourth professional affiliation is a banker. This used to be a real personal relationship. FinTech is in the midst of trying to disrupt, and they certainly are a significant part of the banking community across the board. As we talked in the first 2 weeks, the banker is the access to financial loans. More than that, unless you need private investors, a banker is the access to the government loan community, because most of them operate on a guaranteed process and proceed from there. Now, you can make lots of arguments about what else might be essential, but these are the 4 that I think everyone needs to consider. And for those of you who grow to full-time and high growth ventures, you'll see in a minute when I get to considerations, I just consider that they are essential. There certainly can be others. Jim made a very good point about the certified financial planners. Sometimes those could be a separate expertise if your accountant has it, or you look for that up front. That's actually a good way to kill 2 birds with 1 stone. So let me stop here and just double check the chat and see.
Can I ask a question?
Certainly. Mm-hmm.
Yes, and I put it in the chat, but I was just, when you were talking about commercial insurance brokers, that I've never heard of that specifically. When I got my insurance, I just kind of added another commercial policy. But is that something that I should be looking at instead of something like just adding that on to like my nationwide provider?
So my answer to that is if you're home-based and if you're part-time, I think you did the right thing. I actually counsel lots of part-time folks to do just exactly what you did with regard to tapping their initial insurance in order to be able to get that accomplished. Once you move out, and I have the arbitrary figure as we've talked to this of once you move beyond $30,000 or $40,000 in sales, I really think you're going to want knowledge around a commercial insurance broker that has access to those lines. Sometimes the folks in insurance that do business with us personally are not as adept at the commercial insurance broker lines, and that line, like so many things, is developing with all sorts of considerations, new considerations like cybersecurity and things like that, which a person who has dealt with you because of your residential relationship may or may not know. While you're home-based and part-time, don't have much problem with that at all, but otherwise I would seek out the folks who are business insurance brokers versus just the folks that do that. That could be as easily as calling nationwide and asking for access for that department. Often they're different, and you will, your initial relationship is not a bad one to try and exploit but I would graduate if my business got beyond part-time from a home-based level to commercial insurance broker. And once again, I'm going to take advantage of the expertise in the room and see if Jim has any thoughts in that regard.
Yeah, Rashida, you and I have talked about this a little bit, so let me share that conversation with everybody.
Okay.
A broker an agent or a broker may or may not represent one insurance company like Nationwide or State Farm or something like that. There are many commercial independent brokers out there that work with small businesses to find a variety of kinds of insurance for them, both corporate and personal and all that kind of stuff. So here in the Hampton Roads area, they're pretty easy to find. Just look up insurance brokers or insurance agencies. And what you'll find is there are a lot of them that are, of course, by name, State Farm, Nationwide, all of those. But you'll also find some independent insurance agents which can handle, they can find any underwriter that's the cheapest and best for you. So I would say the same. I would just piggyback on what Bill said. Your commercial insurance broker or agent, broker preferred, is a relationship you need to build.
So thanks, Jim. And then we're to bankers. So those are the four essential ones. And I will come back to this as we walk through management and operations and come through the initial, as we go through part-time, full-time, and high growth startups. So let's start with part-time. You can see here almost right off the bat, the corporate attorney may or may not be necessary. It is possible to use internet options, and I realize at the part-time stage, people are often trying to avoid some of the costs associated with corporate attorneys, and good corporate attorneys do have some high hourly rates, so that is a worthy consideration. I do get nervous even with the part-time venture. You know, I think most part-time ventures can operate without employment law. But if you have to put contracts in place or get a baseline contract that you can use over and over again, often I think that's worth the cost of running by an attorney to make sure you have taken everything into account. But I don't have much trouble with the internet options and those things on site to keep your expenses low. Once again, come down to the third one, as long as you have talked with a commercial insurance broker or agent, particularly if you're operating as a sole proprietorship, to make sure that we put some insurance protection between the liabilities that may exist with your new business venture versus whatever assets you may have built in your personal life. Accountants, I have a ready-made joke for this. Most of you know if you can get them on the phone, you can call the Internal Revenue Service and get tax advice, and it's for free. And the joke I've said, and I bet Jim has heard this before, is that there's a 90% chance that they'll get the question you ask right. So just keep in mind that when you talk to the IRS, despite they're the experts, they often don't give but they sometimes will give the wrong answer. Nevertheless, it is a inexpensive way. And while you're in your part-time status, or if you elect to stay there, frankly, the need for complicated tax strategies and things like that is not very significant. Better that I have seen small business owners, and frankly, my clients have taught me this, a number of the tax preparation organizations like H&R Block and things like that have free downloads that can be very, very helpful and would allow you to do it yourself with some degree of competency. So that would avoid the accountant expense. Once again, over the years, I've become a fan of not trying to keep track of taxes and wanting my accountant to be a phone call away if I have those questions. But for those of you trying to avoid that expense, this is an option if you are operating a part-time venture. The commercial insurance broker, I believe, is still essential just to make sure that you walk through those types of activities. I like what Jim said about the broker agent. That does give you access to multiple lines. I don't have much trouble with you leveraging your residential capability with a rider while you're still in the early stages. But then if you do that, just keep in mind, if your business begins to grow, the commercial insurance broker now becomes someone, as Jim said, that you want to develop a relationship with because of their access to multiple lines from everywhere. And then, of course, you want a banker, because the good news here is if you set up a business account with a bank, you have begun the separation of your personal and your business life, which is just a standard good practice, even when you are a part-time venture. Considerations, as you know from our conversations over the past few weeks, I sort of draw an arbitrary line, and it's an arbitrary line. If your sales or your goals are not to exceed $30,000 or $40,000 a year in sales, I sort of put that as a part-time venture. I'm assuming you have other means of income, because that's $40,000 in sales before any expenses come out. I don't believe it's impossible for the entrepreneur, the small business owner, to do some of the professional affiliation work on their own. But keep in mind, you may require paid professional advice from time to time. Contracts is the thing that can creep up. There are lots of part-time businesses. I know we have a couple in the room who will be selling business to business. Generally, those are contractual relationships. If you deal with a large business, they may want you to review terms and conditions. And the first time you get sent 40 pages of terms, conditions from a potential customers, you're probably going to get that sinking feeling in your stomach saying, gee, I'd really like someone to talk through this with me so I know what I'm signing. So just keep that in mind with regard to those of you who even plan just to operate a part-time venture. Critical consideration is the human resource and talent needs. Hopefully, you do most of this on your own. But if you do have the need for outside individuals, I'm hopeful it can be independent contractors or an individual that you can enter into a consulting relationship with and define them as an independent contractor to meet periodic or sporadic talent needs. Once again, that's a test with the IRS as to whether or not someone passes that. And I often counsel part-time businesses to see if they can meet any outside talent needs with independent contractors. Special things that come up, you meet a second client or a third client, they have a special request. If you can put a vendor relationship in place to do that, that will come and go as your work with that client develops. So just keep that in mind. For part-time business owners, you'll probably want to learn an accounting system. It's not impossible. It's not the greatest thing you'll ever want to do in most cases. But if you learn an accounting system and can track the success of your business, you will save most of the costs associated with bookkeeping and with accountants. Website and social media competency can be done to a point on your own. And when we have Cameron Henry here next week, he'll talk about WordPress and ways that that can be done. And just in case, I always remember, I've worked with lots of part-time ventures who did exactly what they wanted to do part-time for many, many years. But if you do discover that you're onto something and you want to grow this into a full-scale venture, the concept of scale and building systems that can grow as you add sales and employees becomes important. And for the part-time folks in the room, we're going to talk about that more in just a minute with the full-time and the high-growth startups. This is a picture of an organizational chart, a simple one for a part-time business. And you see the admin up there. If you're part-time, team is mostly the owner. So you have to become reasonably proficient. Hopefully you're good in operations. You do what you do. You're the marketing and sales individual, and you'll have to learn a bit about information technology. As soon as you start delegating those out, you start incurring expenses that may mitigate your profit goals. And then you can see over here on the right, the need to keep in mind your legal affiliations. But by and large, for the folks who are part-time, you can see the owner is most of the management team, And so you need to develop a certain level of competency to operate your venture on your own. The annual plan is pretty straightforward. Keep in mind your organizational element. I'm a fan, as you've known, for laying out a budget and laying out a year. Determine what your marketing and operational activities are going to be and what your infrastructure needs may be. Hopefully that's a website and a nice home office. And then just do the things that good small business owners do. Revisit your value projections. Keep in mind where your revenue and cash flow projections are taking you. Cash flow is important to the part-time venture. It's essential to all others. But if you're operating project to project, just be aware that you are making money. And then you can see your customer experience, time management, organization, and record keeping are the other activities for the part-time ventures that you see over there, and then anything else you may learn. Let's see, we stop, we're good there. Full-time startups. Now we've made a transition, okay? This is a significant part of your life. It may be your life, and we are growing for some level of growth and some level of personal wealth building with your business. This is how you're going to take care of yourself. Now the professional affiliations, as you can see, are the same, except now I believe they become essential. And the principal reasons for most of you will be legal organization, contracts, and employment law. The accountant can be very helpful with record-keeping systems and aligning you with him. They, of course, should be your tax expert. And as you heard Jim Franklin earlier, the best are the folks who can provide strategic assistance. And when you're interviewing up front, I just think Jim's 100% correct about that, adding that level of strategic knowledge. If you sense that in your accountant, I would choose that over the person who is just the tax expert. You now will need the commercial insurance broker. You need access to the lines. You undoubtedly have property and other liability exposures with regard to your business. You will want to talk with your insurance broker once or twice a year. There are developing elements, and as your business grows, you'll be surprised at the things like key man insurance and things like that that your commercial insurance broker will begin to bring up so that you're covered. And then bankers, of course, once again, at the core level, are the folks that give you that separation between your personal and your business life with the establish of your financial accounts. And then hopefully the relationship with the banker as you grow into that realm of meeting their underwriting requirements are in access to debt financing if it's appropriate, or to government loan programs as that may be. You can see here the considerations. So now I've graduated from I'll be willing to consider things part-time. Once you're a full-time venture, I believe the professional affiliations are essential. They become a significant part of your management team. You are going to start paying small retainers so that they are a phone call away when you need to ask them questions. The owner's principal responsibilities now become significant. The owner is the person driving resources, driving revenue. And if you are going to need employees, and as you start to stretch into the $100,000 to $1 million range of sales, it is unlikely that you will not need employees at some point. So recruiting talent becomes important. You always have the issues of adjusting product and service to your customers. And now you have graduated as an owner where your personal and your business life are tied to the liabilities of your business elements. So you're always assessing risk. I was taught this 30 years ago. I've listened and read many books on what entrepreneurs do is take risk. I actually don't believe that. I actually do believe they take risk, but they take less. I had a business owner teach me many years ago that what a small business owner that is doing the right thing does is they assess the risk and they try to get them all lined up, and then they mitigate them. You figure out what the answers are and you plan. Now, it's almost impossible to know 100% of everything you need to know, but I really like that approach to risk. You assess the risk as much as you can, and you mitigate as many as possible. And hopefully that puts you in a position to make solid decisions. You'll see there in the blue, when you're in your first full-time venture, the small business owner can be an all-encompassing task. This is a paragraph I copied years ago. You will do many and all things at some point, everything from emptying the trash to marketing and sales and other things. Hopefully, you will grow to the point where you will have assistance from employees, but you're responsible for the big picture and for managing virtually everything, and it will feel like that, particularly during that initial year or two of building your business to profitability. Human resource needs now become an issue that are probably best met with employees. And once you add employees, you add the human element to your business, the need for infrastructure and training for them, for what you need them to do. And of course, we add payroll considerations and all the tax elements that come along with that. So once you add employees, you've added a systemic element to your business that you need to think through in total. And once again, I realize I've had my fair share even of partners over the years. I was brought up to grow businesses, but I have had many friends over the years who have grown businesses to a certain stage, done very, very well, but stopped there. We're not interested in growing any further. But if you are interested in growing your business, the concept of getting systems in place that can scale with you becomes an important consideration and something that you need to take into account. So you'll hear people talk about scale, and that generally surrounds to building processes and systems that can grow step by step and can be predictive for you to build your business accordingly. A look at an organizational chart. You can see here now it begins to become significant. You will have all of these elements at a minimum if you are developing a relatively simple venture, perhaps one that's not technology oriented or something like that. But you can see you'll need to be able to operate the business. You will need a marketing and sales effort. It's very unlikely that information technology and websites and social media will not be part of your promotional strategies. And then you, of course, may need to hire employees. Initially, that's the owner. And sometimes the owner will be real good at one of these and will hire employees or outsource to get the others. So as you grow into your full-time venture, it's worth taking personal stock as to what you're really good at, what you really like to do. And generally, most people are taught that in organizing their business, that you begin to center and do something very well, and then you hire or you outsource the other very important things that you need to do in order to make your business successful. So once you become a full-time venture, you have the options of yourself, of employees, and outsourcing in order to plan, organize, staff, direct, and control your business. And then over there, you see on the right-hand side, you have your professional affiliations that are a phone call away and people that you can talk to for those elements. When I get to the full-time venture, because I'm just seeing more and more of this, given all the technology platforms, the number of you that exist in businesses and use those platforms, I've added a fifth professional affiliation, and that's your fulfillment operations. I realize some of you will offer service businesses, but there are a lot of built fulfillment operations that major corporations have built for small business owners to take advantage of. And I add them as a fifth consideration for particularly for those of you involved with products. And then you see down here at the bottom, now we begin to add significant robustness to your firm. You may have employees. They bring the best and the worst of everything with running a small business. You will have employees that will be problems. You will have employees that you will not believe you can get along without. So they bring a lot to the table, but they do have to be managed. And from time to time, you will encounter problems. Those of you with service or products will need to determine your supply chain and build that out. And then I want you to be looking at scalable infrastructure. I'm not very interested in, I need an accounting system that can grow with you to $5 or $10 million in sales versus something that can be built off a cash flow statement out of Microsoft Excel. So these are the elements you can see that begin to give you a picture of a full enterprise and a firm that is capable of getting into the $100,000 to $1 million range. And this is just a seminal sort of organizational chart. And now the concept of management team becomes important. I know for a fact that, that Jim Franklin participates at the highest levels of some growth elements, and he will tell you that if you're going to deal with investors or attempt to grow a business, your management team is perhaps, thinking of it in that way, is just a seminal activity that you need to ingrain into how you move your business forward. Just a minute, let me check the chat. There's Jim, and they've got both there, so we're good there. When you get that, of course, we begin to unpack that 12-month projection I want you to take, and you can see here, these are the particular line items now that begin to fill out. So you can see after those first 2 weeks, as we built this out in total, the line items literally week by week have started to add up. And you need to be able to track this, you need to be able to project, and you need to be able to measure month by month against your project, against your effort. But you can see here, employees now are cost, professional affiliations, you may have returners. Very likely with insurance, you may enter into a quarterly or a twice-a-year payment structure. Sometimes that is done monthly as well. But you can see now how all of these expenses have started to add into your budget. And if you're a full-time venture, you want to start looking at your budget as an income statement that you're reviewing for the progress of your business on an ongoing basis, and once again, so that you know your cost. The elements for the part-time venture can be largely the same. The organizational chart you can see is substantially more robust and begins to add employees and vendors. Certainly now we need annual planning around marketing and operations. You will constantly revisit your value proposition with as you engage customers. And now with financial projections, the issue of cash flow and being able to meet payroll on a biweekly or other timely basis becomes absolutely essential, as well as paying your cost, as well as paying your vendors. Now your business systems begin to really build out. Of course, there's the customer experience that you've been designing from the start. There's capacity planning for your product. There may be a facility if you're not going to operate in your home, or even if you're going to operate in your home to a significant level, facility locations and planning becomes an important part. And then your supply chain, those of you that carry inventory will need to be able to measure that. And then you will become knowledgeable based on all of your individual thought processes and your venture ideas for key performance measures that are important to your business. As you learn those, start to track those. They may be unique to you, but if you learn them and they make a difference in your customer experience, certainly begin to track those as well in your annual planning. And then there's the issue of growth. So keep in mind, by and large, growth comes from 6 individual areas. Look at them anywhere. This is just my attempt to put it into a succinct assessment that you can look at on an ongoing basis. You want to develop a relationship with your initial customers, and ideally, I would like a business strategy that allows you to have recurring revenue. So as you develop a customer, you can start applying the measure of lifetime revenue generation to them. We always take care of that. We always remarket to them. And if they're having a good experience with you, many will return. Then look at your competitors. That's the next place where some of your customers are likely shopping. And if you can develop a competitive advantage, you can make a case for attracting those elements. Many of you, as you get into the business, will determine that your services or your products may have applicability to adjacent markets, and that may give you additional potential. Many of you can be very brilliant in positioning your products and your services in order to gain additional market share. And those four elements are the things for the initial startup seeking to become a full commercialized business will always be applicable. Joint ventures, mergers and acquisitions are a growth factor, but it's my experience that for full-time ventures that are not on a high growth path, mergers and acquisitions may be a one-time experience for you if you ever have to look at an offer. And generally, it will happen after your 5 to 10 years in business. You've developed significant profitability, and you might have a product or service that is that somebody else believes they could purchase and leverage to make their business grow. So generally, JV mergers and acquisitions are not critically important for the full-time, non-high growth venture at this stage. New products and services you can always look at, and then I always include luck is the fallout of hard work. I've had too many small business owners come in, they just lucked into it, and I would talk with them, and they spent 2 years of toiling, doing all of the first 4 or 5, and that's where their luck came out of. So just keep in mind, these are the basic ways to grow and to look at it as you move your business forward. Check the chat, we're good there. Now we're to the high growth startup. And now you'll see a number of things begin to change because a number of things a high growth startup must do right from the start in order to have a chance to do the things that we will talk about. So the professional affiliations, my experience is the attorney now probably needs to be a firm, and that's because you may need additional competencies beyond legal organization and contracts. The most often one, particularly for the high-tech startup or one that hopes to raise money, is intellectual property strategies. You have something that can be patented, perhaps there's a trade secret, but you are working with the concept of a barrier to entry that will keep competitors at bay. And often the attorneys are the access to those kinds of strategies. The accountant is all of the reasons that we've spoken of previously, and you heard Jim speak to, and the strategic assistance now becomes essential. This is someone you want to know that understands your business model and how you're growing. Often, attorneys and accountants can be access to private investors if they're willing to do so. Then you have a commercial insurance broker, absolutely essential. You still have your banking relationship. They may not be a financial organization, but once again, bankers begin to bring cash flow and other services to bear that may be applicable. And now we have introduced the concept of the potential for investors. So multiple owners, perhaps a board of directors, and perhaps for those of you that start to grow in that first year, the need for an investment banking relationship. So you can see the high growth startup begins to add an element to professional affiliations because it is likely you may have the need to raise money. You will be selling some ownership in your firm in order to raise that, and that adds an element to your professional needs that is significant and goes beyond the core 4. The considerations now for the high growth are very, very significant. One, you are likely, if you are raising money, to have other owners. And so now we have other folks that have become owners in your firm, and they will want to be heard from, and they will want to be taken into account. I had someone ask me 25 years ago, how do you find silent partners? And I told them I was unaware of the concept of silent partners. I had by that time made my first investment in business, and I was very interested in what was going on in it day to day. And I was not silent about that at all. So owners are folks often that can bring real expertise to the equation, including money, but they will be very interested that your business is growing at a significant pace, and it creates the opportunity to give them an investment grade return sometime down within the 3 to 10 year period that most of that occurs. Professional affiliations are essential, and now speed and scale are essential. So trying to find the inexpensive way to build out your business if you're looking at a high growth venture is a mistake. You need to consider systems that can be put in place quickly and can be scaled. For most high growth ventures, of course, you will be going through significant product and service development. The concepts of lean startup and minimally viable products will be an ongoing effort for you. And as your business grows, research and development will probably become a line item that many other small businesses don't need, but will be important for you as you grow into a marketplace that will begin to recognize you very quickly as a competitor, and as you meet the demands of finding a growing customer base and what they want. The term shifts from small business owner to founder in this case, and it's not just the founder. I think Jim would tell you there's a saying out there, and it's why we named the course Money, Management, and Markets. The most critical team when you start searching, the most critical aspect that venture capital funds, angel investors, high net worth investors are looking for investing in a small business is a management team. They know high growth cannot be done by one person, so they want to make sure that the management team is being built out or is going to be built out. I was taught by a venture capitalist 25 years ago that he would invest in a first-rate management team and a second-rate product line before he would do the later. So those of you looking at high growth ventures, I know a number of you work with Jim, and that he does a lot of work in that space. The management team now is important. It becomes a critical element of your development. It becomes a critical element of your presentation and your attempts to do the 5 things here that I think are most important for the founder. And that's raise fund. The concept of burn rate. Often, if you are in a high growth venture, you will go through several rounds of raising money. And the concept of burn rate enters your cash flow considerations, because you will grow the firm to a milestone and then have to be out raising money ahead of that so that you don't run out of money given the growth that you may be experiencing. You, of course, want to drive revenue and customer traction, and you're always making adjustments to products and markets. You will be recruiting talent, perhaps the 3rd or 4th most important thing you will do, because you will be building out your management team. And if you hit high growth and really begin to get customer traction, you will be building the downlines from those individuals. And then assessing risk and mitigating it is there. Keep in mind, the reason for the team is talent needs and systems will evolve quickly. So high growth ventures require a consistent attention to this, and that's because you will often find that you did fine with 5 or 10 people, and then you actually find your way into significant customer traction, and then there's a need to build out a couple of teams of 10 or 20 people. If you hit significant high growth in your 2nd or 3rd year, raising and recruiting talent can become a day in and day out activity, as well as growing your system. So high growth brings those elements, and believe me, those are positives, but they come with a lot of responsibility and with a lot of need with regard to the management team to successfully build out your systems and to do it in a speedy activity. This is the basics. When you start out, if you're a high growth venture and you're considering that now, and you're thinking that you're going to raise money from private investors, you can see here, I've seen many varieties, but at an absolute minimum, investors in venture capital firms will want to know who the founder is. I've not seen many founders exist without a chief operations officer, at least not for very long. I put the term strong right hand in there. They will want to know that there is a chief financial officer. They're looking for who's going to control the money. They're looking for an individual that can help raise funds. They're looking for an individual that can build out your financial systems and knows what big looks like as you attempt to do that. Almost always high growth ventures have some element of technology, and the term chief technology officer has done that, and then chief marketing officers. Those 3 or 4 tend to be essential. And depending upon the significance of your growth and how fast, I have seen product directors, human resources, and many other positions in the initial team that is proposed to investors to raise money. But at a minimum, if you are out raising money, you can bet solid investors and solid previous owners who have been successful with high growth elements will talk about the need to see operations, marketing and sales, finance and technology covered with your initial team, because if you're going to grow at a fast pace, those will need to be in place. A nice term I've heard a number of angel investors use in my lifetime is it's about team, traction, and technology. Traction is about finding customers, but you will not make much path, you will not carve a path forward with investors without having a management team in place and being able to present the management team to them. The shift now for the high growth venture is into extensive business planning, generally 1 to 5 years. Because of the speed and the scale, product and service development are always important. Customer traction is important because that proves that you're getting market penetration and that you're growing. Management team develop will build from that initial direct reports to you into the downlines for those direct reports. And always that will come with needs and with financial considerations that need to be built into your financial projections. That allows you to determine the amounts of money that you will need to raise, and then to be able to tell investors how you will use those funds. And now for the high growth strata, we add the concept of exit strategies. So now you have investors in your business. They will not be looking probably to be paid in the first year or 2. That is an advantage to you because you can use the funds to fund growth. But once we get into the 3 to 5 year period, and certainly into the 5 to 10 year period, they will be looking for a return on their investment. The typical exit strategies are acquisition by another company, a leveraged buyout, or you really start to grow and you're going to manage this to a significant level, and you can start doing things with debt financing. There is the possibility of going public. I've been at this for about 30 years, and I've only been affiliated with 2 firms that considered or got to the point of engaging investment banking for going publics. In the end, they both got acquired. But nevertheless, that is one of the options for those of you that can hit the highest targets of high growth. Jim, I want to stop there and see if you want to add anything for our high growth folks. I know you play with that in an ongoing basis, so let me make sure Jim has stayed here.
Yeah, no,
Jim, yeah. I know you play in this space a lot, and I'm trying to keep this to an hour and 15 minutes, but your thoughts, I know you play this because obviously we don't want to miss any of our high growth ventures.
Yeah, everybody ultimately ends up in a high growth venture, whether your definition of growth or not changes. But let me give you the venture capitalists formula that I use, and I learned it a lot of years ago the same way you did, Bill. I use a 50, 30, 20 kind of ratio for my decision-making process on a high growth business. 50% of my decision is made on the management team. 30% is on the product, or in what you call here technology, but essentially it's what you're selling, and only 20% on the finance. And the reason is, and you alluded to it a little bit, Bill, the reason is a good management team can fix anything that's wrong with the other two. So as things start going bad, I want to know that you've got a team that gets along together and that has expertise in this area and that understands where the strategy is taking them, because that's where they're taking my money. And that's the only thing I'd add, Bill. You did a great job. This is really, really good information.
And I'm going to still at 50, 30, 20. For those of you online, just remember that equation. That's an excellent way to put a number on the importance of management team development. Thank you very much, Jim. Growth, of course, becomes the same. Once again, these are the 6 basic ways. But now joint ventures, mergers, and acquisitions become a real option once you get into the 3 to 5 year period. So obviously, you can. It's not only the case of where you might be bought, but you may find firms that can be acquired, and you may want to engage with your stockholders and your investment base about doing that. Always an acquisition strategy is coupled with a high growth organic strategy, so make sure that you keep in mind these goes. Acquisitions and mergers is deal making. I've done 5 or 6 in my lifetime. I know Jim has done a number of them. It can become a very sexy thing to get involved with. But for those of you growing a business or in high growth mode, forgetting about your organic strategy and not tying it in with your thoughts around acquisition is going to send you down the wrong path. So just keep that in mind from some folks who have been down that path before. Many of you in the high growth elements there, you may find these things helpful. I've used them from time to time. There are a number of business model canvases. This is perhaps the most famous one. Alexander Osterwalder put it together and put it in a book that I read a number of years ago. It's a way of laying all of this into a paperwork. You'll see the elements. It gives you a picture of your partners, your activities, often very helpful, because once you get into high growth mode and are attempting to scale, being able to put it in one place can be helpful. I think this is the most popular one out there. If you find one that you work with, you can certainly choose others. This is one I've had good luck with over the years and has been very helpful with those that are not in the highest growth modes. It's not much different, but it tends to put a lot of emphasis on core competencies and value proposition and branding. And then it finishes the same way as Mr. Osterwalder. So any of you, a canvas, a business model canvas is a good way to sort of get a picture of your business if you're pictorially oriented. And I just wanted to offer you a couple of examples, knowing that these are out here and you'll often see them in the business literature. If you find one particular to your business or you develop one on your own that is helpful, then certainly use it. And continue to use it on that mode. So let's see. Jim has shared his thought, Jim has shared all of that. Got you. Very good. So if you can take a look at the chat, Jim reiterated his issues with the high growth ventures. Simple elements before we finish up today. For those of you that plan on, if you need to think through high growth elements, I like it helps me when I get busy to reorient myself to just a few steps. And I like to keep those steps to 3 to 5 things. You can see the 5-step process here. Whenever I have to think through something, I want to plan it. I want to organize it. I want to determine how I'm going to staff it. And then I want to know how I'm going to direct and control it. Nice little 5-step process. Many of you who may have taken management courses, this is a pretty standard Peter Drucker format for just reorienting yourself and thinking through and analyzing new projects. People, processes, and equipment is always helpful for me, particularly when I have to determine how much money I'm going to use, because I'm going to have to hire people. They come with salaries and all of the elements with payroll taxes. I have been a fan for years of drawing out my processes, as you all seen in the marketing elements, because when I draw them out, I can not only determine what the process is, I can adjust it as I learn more about it. And also, when I draw out my processes, I tend to run into the things that are going to cost me money, and I can build those into a budget. And then, of course, if I have equipment needs, I can have those researched and put those in there. So either of those methods worked. Those are just time-tested elements over the years that I was taught that have worked for me in terms of making progress with my business. As a rule, I had this drummed into me 25 to 30 years ago and never found fault with it. Successful small business owners keep things orderly. You drive out variation, particularly in your customer experiences, because when you have variation, that tends to mean you have unnecessary cost. And the advantage of keeping things oriented and process-oriented in your mind also helps when you get a new idea. If someone comes in and says they can do something better, you can analyze it, and then you can just lay it over into your orderly process of doing things and simply do it better and take whatever advantages it may give you, such as less cost or something like that. I have no problem with either linear thinking or systems. I've met way too many successful small business owners, and both processes work. If you're a linear thinker and check-based processes, it is certainly a decision-making element that can work. You want to do it with rigor as the small business owners. More to the point, though, and I had to teach myself this the past 20 years, a systems-based evaluation also works. It's particularly important for the high growth elements because your business can become quite complex. And often the linear analysis doesn't get to the core of what the problem is. And so sort of a systems mindset can also be a very, very effective way for you to look at your business and to run it. And then for all of you full-time and high growth ventures, cash flow is just absolutely critical. The reason for the financial projections and all of that is you can't run out of money. I'm sure some of you in the room have heard the stories of the profitable business that cease to exist. And the principal reason that happens is it's quite possible to be making money in a business in terms of adding everything up at the end of the year, but because vendors or suppliers or customers don't necessarily pay you on time, and vendors and employees have to be paid, that you run out of cash. And so you may have developed a business model that when we lay it out in a profit and loss on an accrued basis shows that you were making money, but you ran out of cash and you weren't able to pay your employees or your vendors for some amount of time, and the business was not able to exist on that basis. So cash flow is very, very critical. For those of you who go into a high growth mode, cash flow and the concept of burn rate will become a day in and day out planning activity for you. So cash is king, as they say, and is an important element there. Let's see, we're good there. And I think with any luck, that should do it. Oh, employees. I don't know how you get on without them. You will hear everything that's good and bad about them, and unfortunately, and I'm here to tell you that by and large, they work out in your favor. But you can see these are just the basics that I wanted to cover. Keep in mind the top one there: when you engage employees or vendors for that equation, you have the right to your expectations, but you have to hire for them. You have to communicate your expectations, and you have to train as necessary. Seen too many small business owners who say, gee, I'd really just like someone to walk in the door and be able to do that. So would all of us, but it is unlikely to occur. So you have the right to your expectations, enforce them. but hire for them, communicate them constantly, and then train as is required. Very, very important for the folks who with a full-time venture and start to hire employees, and for the high growth venture that you have a strong hiring and onboarding plan. Automate what you can. Create repeatable customer experiences and processes and workflows. That is how you keep unnecessary cost out of your business. Give clear direction, but be open to feedback. It's the nature of employees. I grew up very early in my career with a very, very authoritarian business owner. I did not suffer any worse for wear, but I did watch a number of employees over 4 or 5 years exit that business, who I knew and knew later became very successful people who could not accept the authoritarian approach that he had. I think in this day and time, it's much more open, that you're open to feedback and that you listen. Monitor progress, measure what you can. There's an old saying, if it's not measured, it's not managed, and then just plan it ahead. You will find the need to train employees. I know I've got a number of you who've had military backgrounds. I was fortunate 30 years ago to take a military training course, a week-long course on how they trained in the military. And I became a real fan of it. They actually started with these 3 elements. A good training program shows someone how to do it. You tell them how to do it, and then you make them do it. Those 3 elements involve all of the cognitive and kinetic elements. So when you're evaluating your training program, it's been my experience, if you keep these 3 things in mind, you'll be in good shape. And then just remember, I've learned this in my career. Occasionally people do rise to the occasion, so don't discount that when you see it. But my experience is that people want to do a good job, but they don't necessarily rise to the occasion. They default to their training. So the need for training and for feedback and to constantly engage with your employees is important for the full-time and particularly for the high growth venture as well.